The hidden rules of successful investing. Have you ever noticed that two people can buy the exact same investment on the exact same day, and 10 years later, one becomes wealthy while the other quits investing altogether? It wasn't the investment that made the difference. It was the investor. Here's the truth that Wall Street rarely tells you. Successful investing is less about picking winning stocks and more about winning the battle inside your own mind. Today, we're uncovering the hidden rules that quietly separate ordinary investors from extraordinary wealth builders. Some of these rules are uncomfortable, some are completely counterintuitive, but together they've quietly created fortunes for people like Warren Buffett, Charlie Munger, Peter Lynch, and countless investors you've never heard of. Let's begin. Rule 1. The market pays you for patience, not activity. Most people believe successful investors are constantly buying and selling. They're wrong. The market has an interesting habit. It rewards those who can sit still while everyone else is running around. Imagine planting a mango tree. You don't dig it up every week to check whether it's growing. You water it, protect it, and give it time. Your investments deserve the same patience. Behavioral finance calls this action bias, our natural tendency to believe doing something always feels more productive than doing nothing. Ironically, some of the most profitable investing decisions are the ones you never make. Rule 2. Your biggest enemy doesn't ring the opening bell. Most people think inflation is the enemy. Some think taxes are. Others blame politicians or the economy. But the greatest threat to your wealth follows you everywhere. It's the voice in your head. Fear convinces you to sell after prices crash. Greed convinces you to buy after prices have already skyrocketed. Regret keeps you from investing again after one bad experience. The market doesn't create these emotions. It simply exposes them. As Warren Buffett wisely observed, the stock market is a device for transferring wealth from the impatient to the patient. Rule 3. Boring is surprisingly profitable. Here's something social media rarely celebrates. The investments that quietly build millionaires are often incredibly boring. A profitable business with steady earnings, an index fund that grows year after year, a diversified portfolio that nobody brags about at parties. These don't generate exciting headlines, but they often generate remarkable wealth. The human brain craves excitement because dopamine loves novelty. Your portfolio doesn't. Rule 4. Think in decades, not days. Most investors check prices every morning. Successful investors check progress over years. Jeff Bezos once said that people overestimate what can happen in 1 year and underestimate what can happen in 10. The same is true in investing. Compounding works almost invisibly at first. Then, almost magically, growth begins accelerating. What looked like slow progress becomes extraordinary momentum. That's why the first million often takes the longest. The next ones arrive much faster. Rule 5. Ignore the crowd, especially when they're loud. Every market cycle creates heroes. Every bubble creates experts. And every crash creates prophets of doom. If you make decisions based on headlines, your emotions will always be rented by someone else. Charlie Munger once joked that the world isn't driven by greed as much as envy. People don't simply want to make money. They want to make more than everyone around them. That's a dangerous investment strategy. Great investors don't follow crowds. They follow principles. Rule 6. Wealth is built during ordinary days. People imagine wealth is created during market booms. Not really. It's created during ordinary Tuesdays, the day you choose to invest instead of spend, the month you continue investing despite scary news, the year you stay disciplined while others chase trends. Financial freedom isn't usually built through one brilliant decision. It's built through thousands of ordinary decisions repeated consistently. That's the hidden power of discipline. Rule 7. Never stop learning. The best investors remain students forever. Markets evolve, businesses evolve, technology evolve. Your thinking should evolve too. Peter Lynch famously encouraged investors to invest in what they understand. Understanding requires curiosity. Curiosity leads to knowledge. Knowledge improves decisions. And better decisions repeated over decades become extraordinary wealth. Closing. Here's the biggest hidden rule of successful investing. Your portfolio is simply a reflection of your habits. Every investment is really a vote for your future self. So don't ask, what's the next stock I should buy? Instead, ask, am I becoming the kind of investor who deserves long-term success? Because markets rise, markets fall, but disciplined investors keep showing up. If this episode changed the way you think about investing, let me know in the comments. Which hidden rule surprised you the most? Don't forget to like this video, subscribe for more deep dives into the psychology of investing, and share it with someone who wants to build wealth the smart way. Until next time, remember, the greatest investment you'll ever make isn't in a stock. It's in the mindset that guides every financial decision you make.